Hello friends, welcome back to my YouTube channel. Today I'm going to explain how to analysis the business transactions. Based on the business transactions, what is the financial statement it will going to impact. If you understand in that aspect based on the transactions, whether it will going to impact a balance sheet or a P&L account, which element it will impact. When I say element, whether it is impact asset, liability, creditors, debtors, right? As an accountant, everyone should understand in this aspect. When you are working in a real-time basis in any organization, based on the transaction, if you analyze and understanding in how I'm going to explain, that means your accounting will be very good, and you will be in a better position to understand the financial statement called balance sheet and P&L account. Let's talk about the list of example I have written here one by one. Okay. Before that, please do subscribe my channel, watch it and share, like it. Thank you so much. Let's talk about the example. Mr. B borrowed of rupees 2 lakhs from bank at the rate of 10% interest. Right? What is a journal entry? When borrowing the money by an entity, what is a journal entry? Cash is coming to the business, right? Right? I will write journal entry also. So cash account debtor to loan account, because it taken from the bank, right? Loan account of rupees 2 lakhs. Of rupees 2 lakh being loan taken from bank, right? So in this transactions, what are the changes about bought by this transactions? Let's discuss and analyze. So when Mr. B borrowed cash of rupees 2 lakhs into the business, my cash is increased. What is the nature of cash? It is an asset. It is an asset. As per accounting rule, golden accounting rule, cash comes under which account? Real account. Debit what comes into the business. That means cash is coming to the business, and hence 2 lakhs is debit. That means increased. This is the element asset. What is element here? Asset is increased. Where it will impact? Balance sheet. And loan is a, what is the nature of the loan? Liability. When liability is increasing, credit, right? It is coming to the business. And where it will impact? Balance sheet under liability side, right? This is how. Let's talk about the other example. Let's talk about next example. Mr. A purchased equipment of 80,000. What is the journal entry? Apply the rule. Analyze the transaction, identify and record the transaction. Purchase equipment of rupees 80,000. Equipment is, what is the nature of equipment? It is an asset. When asset is coming to the business, debit. Equipment account debtor to equipment account debtor to cash account, being equipment purchased by cash, right? 80,000. 80,000 debit, 80,000 credit. Let's understand in terms of what are the financial statement it will impact by this transactions. What are the element? One is asset, another one also asset. Both are asset in this transactions. Asset falls under which account? Real account. As per the real account rule, debit what comes into the business, credit what goes out of the business. Since the equipment is bought into the business, hence the element, the asset, so called asset is increasing, and cash, that is also asset and decreasing, and hence it is a credit. Both are impacting balance sheets. Next one, let's talk about next transaction. So as an accountant, as I mentioned, If you understand any business transaction like this, when you are working in a real-time experience, or if you want to write any CMA or a foundation of the CMA exams or CA exams, right, in that matters, so you will understand better and write the exams well. And also when you are working on a real-time basis, it's a very very good examples. The example I'm giving is just five example, but if you apply the same logic and analysis of business transactions, you will understand very well of the financial statement of the entity. Okay, let's talk about next example. Mr. J purchased goods of rupees 1 lakh for resale, out of which 60% paid in cash, 30% by check, and balance was due. Let's understand the transaction one more time. Purchased goods of 1 lakh rupees for resales. Out of it, 60% paid in cash, remaining 30% by check, and the balance was due. What is the journal entry? Let's write the journal entry and then understand what are the element and what are the finance statement is impacting by this transactions. What are the changes brought by this transaction? Let's regard the journal entry. Purchases, what is the nature of expenses? Expenses increasing. When expenses increasing, what is the under which account it will falls? Nominal account. What are the nominal account rule? Debit all expenses and losses, credit all incomes and gains. Since it is the expense of the business, debit. Purchase account data to purchase account data to purchase account, again we have paid, right? Yeah, purchase is how much? 1 lakh. So 1 lakh rupees of expenses incurred to 60% paid in cash. When cash is going out of business, right? Since it is paid by the company because goods is purchased. So cash account 60% on 1 lakh is the 60,000. 60,000. Again 30% by check, right? So bank balance is decreasing to bank account. 30% on 1 lakh is 30,000. 30,000. And remaining was due. To whom it is due? When I talking about based on this transaction, it is a due. That means when company is purchasing the goods and which is due means creditor will create. Supplier, you are being supplying goods on credit basis, the remaining portion. So 60 plus 30%, 90%, remaining 10% was due, that is a creditors. Let's record it. To creditors or payable 10%. So 60%, 10% is equal to 90%, remaining 10%, that is 10,000 on credit basis. It was due. Being, narration is important to understand the journal entry. Being purchased goods on purchased goods. Right? Let's analyze the what are the element and which financial statement will impact. Okay. So purchased, we know it is an expenses debit. When expense is incurred, it is a debit as per the nominal account. Hence, purchase account 1 lakh. Now 60% is paid in cash. Out of 1 lakh, company has paid 60%. That is a 60,000 by cash. When cash is going out of business, an element called cash, an asset. Asset is decreasing in the company. So cash is credit. Also 30% by check means company will have a bank account. In bank account there is a bank balance. So remaining 30% company is paying through the check. That means bank balance is decreasing. What is an element here? Asset again. So when asset is decreasing as per the real account rule, credit what goes out of the business. Hence 30,000 is a credit. The next one, right? And balance was due. What is the balance? 10%. 10% on 1 lakh is 10,000. That was a due. When a due is means a creditors will get created. Creditors, right? Because company has to settle. creditors account data, creditors or payable account 10,000, right? 10,000 plus 30,000 plus 60,000 is equal to 1 lakh, right? That means here if you see the analysis of the each and every element, these two are asset going out of the business and hence it's a credit. This is also an element called liability, current liability. What is the current liability? The company has to be settled in within the 12 months of the period. That's why it is creating, creditors is creating, right? Current liability, working capital. It will impact the working capital. When I am talking about working capital, I will explain in brief. Okay, let's talk about and analyze the next transaction. Right? Okay. Goods sold in cash of rupees 1 lakh. Let's record the transaction. Goods sold. Cash. They are telling that goods sold on cash basis. When goods are selling on cash basis, what is coming to the business? Cash. What is the element here? Asset. When asset is coming to the business, debit. Cash account data to sales account, right? Revenue account, sales account of rupees 1 lakh being goods sold on credit. Goods sold on credit. Now let's analyze the journal entry. What is the element? Two elements. So one is asset, another one is revenue. Asset, when asset is coming to the business, debit means asset is increasing. So when you are recording this transaction in the books of account, so you need to understand, okay, cash is coming to the business, my balance sheet will impact that extent, right? And credit side, the element is revenue. As per nominal account rule, incomes and credit, incomes and gains, right? And hence sales is a revenue in nature and credit. It is increasing the revenue. The next transactions, quickly. Okay, Mr. B paid of rupees 80,000 to suppliers. Who is the supplier? The person who supply the goods to the company on the credit basis or cash basis based on the understanding agreement between the company and the suppliers, right? So cash paid to cash paid of rupees 80,000 to suppliers. So that means cash is going out of the business. So suppliers account data to cash account of rupees 80,000 being paid to the suppliers. Being paid to the supplier. What are the elements? Supplier is what is the nature? Sundry creditors, right? Why sundry creditors? Because the third party or the person who is supplying goods to the company on credit basis. When the company is paying a sundry creditor, that means it will decrease. What is the nature of sundry creditors? Current liability, right? When liability is paying, that is a debit. So under balance sheet under liability, sundry creditor will decrease of rupees 80,000. The other element is cash. Again, right? Being cash is paid, and is the element is asset in nature. When asset is decreasing, credit as per the real account rule. Let's talk about the last example what I have given here. Goods sold on credit basis of rupees 90,000. Goods sold on credit basis of rupees 90,000. When goods are selling to other person customers on credit basis, what is the impact? Debtors will arise. Who are the debtors? The person who owes money to the company, right? Let's record the journal entry. So debtors account data to debtors or bills receivable account data to bills account data to sales account being goods sold sold on credit basis. So now, if you analyze these transactions, the element debtors or bills receivable. What is the nature of debtors? Current asset under balance sheet, right? What is the current assets? The current assets are those assets which can be converted into cash or cash equivalent within the 12 months of period. That's why the current assets. So current assets is it will show the liquidity position of the company. That is a different matter. It will the element which company will use in calculation of working capital. When we are discussing on working capital, you will understand better what is the current liability, current assets. Let's talk about analyzing the analysis of transaction here. Okay, debtors means it's a asset in nature. When asset is increasing, it's a debit. That means asset is increasing. So sales is a what is the element? A revenue in nature. When revenues are increasing, credit. Why? As per the nominal account rule, right? Credit all incomes and gains. The sales are income for the company and hence it is the credit. That's it with this example. Hope this video will give you the knowledge on how to analyze. If you understand to analyze any business transactions and put it writing the journal entry, so that you will directly you will directly understand based on the a particular transaction whether it is impacting my balance sheet, whether it is impacting the P&L account, if the balance is impacting, if the asset is decreasing or increasing, or liability is increasing or decreasing, whether that liability is current liability or long-term liability. So you will understand better. I hope this video will give you a benefit of understanding the basic accounting. Thank you very much for watching my video. Please subscribe so that you will get notification whenever I am going to explain the new videos in the accounting concept and other concept. Thank you.